I went too far. So that's one slide. Next slide. General overview. No borrower investment required. Do not need to be a first-time home buyer. That is a big qualification for a lot of them. You don't need to be a first-time home buyer. With our program, you do not. All right, team. Just again, keep in mind, I am still underwriting the file. I am still the bank on the file. We just have a place that'll give the down payment assistance. So they're underwriting. Actually, we're underwriting both. They're doing it in conjunction with us. So we are the underwriters. We have the file in house. It doesn't get brokered out, which is a good thing because we get to keep control. Okay. One program, one set of guidelines offer nationwide to help with the 3.5% or 5% down payment needed for the FHA loans. Okay. If you go higher than that 3.5%, that extra 1.5% team, because again, you're only required, if you take the full 96.5, that other 1.5 to be closing cost assistance. So if it's $100,000 loan, I'm going to use simple numbers. I believe we do have some examples in here as well. $100,000 loan, simple numbers. You're getting $3,500 towards your down payment, and then you're getting 1.5%, which is $1,500 towards your closing costs. So, for example, a $100,000 loan, if the closing costs are $5,000, you only need to bring $3,500 because I'm giving you $1,500. So you get into a house with $3,500. Okay, pretty cheap if you ask me. Terms and rate. Now, there's repayable and there's forgivable. First is the repayable. All right. If you take the 5% option, meaning you're taking 5% down payment assistance, which includes 3.5 towards the first, 1.5. When I say 3.5, that means percentage, guys. So 3.5% of the purchase price is given to you as down payment assistance. That other 1.5 is applied towards closing costs. Again, I'll use a bigger number this time. Let's say it's $200,000 purchase. 3.5% of that is what, $7,000. So $7,000, you get assistance on that. Then you're getting $3,000 towards your closing costs. So again, let's say the closing costs are $8,000 or $9,000. If it's $8,000, you're getting a credit for $3,000. Only need to come to the table with $5,000. Again, not too bad in my book. Now, if you do opt to take the 5%, your interest rate is 2% higher than the rate on the first mortgage. Right now, I believe FHA might be 6.875 at the close of today. So 6.875 plus 2% is you're going to have a second rate amortized over 10 years at 8.875. So you're getting a second mortgage on there. There's a whole second payment. Okay. Now, forgivable. There's no payment. There's 0% APR. You could look at this as a grant, even though it's not. It is a forgivable down payment assistance. All right. It's a 30-year term, interest rate of 0. This loan does not require monthly payment on the second mortgage. It's still considered a second mortgage, team. It's labeled as a second mortgage this way. If you go to sell your house if you read this, forgiveness on the down payment is 3.5% forgiven after 36 consecutive on-time payments on the first mortgage. So if you make your payments, let's say you go 3 payments and you're late on one, your 36-month clock starts all over again. Okay? You are now, as soon as you make 36 consecutive payments on that first, that second one is forgivable. So as a minimum is 3 years, you could, be done, no second mortgage. You already have equity in the home. You only paid for closing costs to get into the house, and you should go into the house with some of your own money, team. I know times are tough out there. People are struggling, but, you should be able to demonstrate you're saving a little money for us, the bank. You are going to have to come with something, but this is as close to zero out of pocket you're going to get, team. All right. Unless you're doing a VA, and you can get a 6% sales concession too, guys, on top of this, which I'll explain in a second. So the forgiveness, if you take the 5% help, you're going to have to pay back that full loan with 2 points above the interest rate on the first. All right. Now, your first mortgage is a normal FHA loan. Rate is going to be slightly higher since you're borrowing the money. Okay. It could be anywhere from 1/8 to 0.5 point higher, depending on your credit, depending on the situation, depending on where your money's coming from. There is going to be some difference in the rate. All right. So the appraised value purchase price, whichever is lower, that's the mortgage lingo, guys, and multiply by that times down payment. So this is calculating the down payment amount. All right. So 280 times 3.5 is 9,800. All right. Your second mortgage would be $9,800. And again, team, we're considering a second mortgage because it's not forgiven yet. It's got to be recorded as a mortgage. This way, if you sell the house, or the foreclosed upon, we have to foreclose upon it. There is something showing that the down payment assistance people have to get their money back. Okay. So that's some quick, simple math, everybody. So this is some program requirements. Down payment amount, 3.5% or 5%. You choose, again, 3.5% forgivable once you make 36 on-time payments to the first. Repayable, 10-year term at the rate of 2% higher than the first mortgage. That would be your 5-year loan. Your 5% help. Forgivable is a 30-year term, interest rate, 0%. Forgiveness is based on DPA percentage. Again, the 3.5 is forgivable, team. After 36 consecutive on-time payments on the first mortgage, we will be able to forgive the entire second mortgage. That's only on the 3.5% down. Now, this is big, guys. No income limits. Okay. If you haven't heard of income limits before, okay, you're going to hear them now. Income limits are your income is limited to certain things. Sometimes the FHA, you can't go above certain income limits or down payment assistance. I got to brush up my FHA guidelines for that. Not that it's been a while, but my underwriters usually tell me and everybody usually makes it. So it's very rare in New York that we hit them. But once you start to do out of the state, it gets a little bit, you get in there a little bit with it. So anything above 135%. So, for example, let's say Suffolk County is $100,000, the average median income. The most somebody could make, let's say you had to stay under that, the most somebody could make to be eligible for this program is 135% because they do want to help lower income borrowers. So they do keep it within that. But in this case, they say, all right, we'll go over that 135%. We're just going to give the rate a little bit higher. Okay. Or they might charge 1/4 of a point of the loan. It all depends on the loan structure. Again, your credit score, if you're taking the 3.5% or the 5%, if you have any other funds, any reserves, it all depends on that as well, team. Okay. Borrowers with a FICO score. Hold on, guys. I just wanted to do something else. Just bring up another thing for me. Bear with me a second. Okay. So that's the income limit. Payment shock. Now, we don't want to put you what's called payment shock, meaning if you're paying for $1,000 in rent, you're not going to go to $4,000 or $5,000 a month in a monthly payment, which is very common nowadays with the rates in the sevens. $400,000 house here on Long Island, $500,000 house, you could easily be in the $4,000 or $5,000 payment range, depending on the monthly taxes. Okay, so payment shock. Borrowers with a credit score of 659 below, payment shock not to exceed 150%. Meaning, if you're paying $1,000 a month in rent, the most your payment can go up to is $1,750. Okay. If you have a better credit score, we can go 175%. If there's no primary housing expense, FICO 640 and above, meaning no primary housing expense, first-time home buyer, might be living with in-laws, might be living with mom and dad, might be living with friends or family, whatever, or just can't prove your rent being paid. You're considering to have no housing expense. We can't work out payment shock. You need to have at least a 640 and above for that. Now, they do limit your debt to income, all right, to 45 on the back end. Okay. So you got to keep that in mind. Again, so we're going to work out payment shock. First-time home buyers, again, there's FHA guidelines for that. I'm not going to get into them. I do my FHA segment, but for intents and purposes, there is no add-ons. So they're not saying they're going, when it says an overlay team, let me define an overlay. That means we, the bank, are asking for more than FHA does. Like, for example, FHA goes down to like a 550 credit score or has no credit score. So if the bank wants to take a risk, they can. We, on the other hand, will not go below 620 on FHA. I could broker out if we do, but you're not getting down payment assistance. We'll have another bank underwrite it for us, mitigate our risk. But an overlay means is my bank going above and beyond FHA guidelines. We are not in this case. The only guideline we do go above and beyond is the credit score needs to be at least a 620 team. Okay? Home buyer education is based on credit score. Quick couple things. They interview you, something done by HUD agency. All right. The first mortgage, 30-year term, fixed rate, fully amortized, must be sold to CBC Mortgage. That's our agency. We sell them to. Okay. Single family, this is the property types. A single family, a PUD means planned unit development, townhome, condo, that's FHA approved, guys. Attached, detached, modular, also manufactured. 2 additional overlays. There's 3. Has to be a double wide. It needs to have the HUD tag, and it needs to have the what's called hurricane strap or tied down to the foundation. Okay. How are you, Joey Salomon? The king of snakes over there. Guy has more bull pythons than the Brazilian rainforest. All right, so repayable, allowed for 3.5% and 5% assistance. Forgivable, allowed for 3.5%. We went over this, team. If you take the 5%, you have to pay the whole thing back. If you're able to take the 3.5%, come up with the extra 1.5% yourself, you don't have to pay back that second mortgage unless you miss payments. But after 36 on-time payments, your second loan is forgiven if you take the 3.5%. Okay. People that have extra money want to go with a lower loan amount to make their payment lower. Very common. Very common. So if they want to make the payment lower, you can't go. You have to the max you could put down is 10% on this product. All right. So again, keep that in mind. And again, team, if you have anything that's case by case, you will have my contact information. We can have a one-on-one. You don't need to get on here to ask me any questions. All right, which we'll go over in a second. These are the property types. Again, single families, planned unit developments, townhomes, condos, attached, detached, modular, also manufactured with 2 additional overlays. 1 to 2 units are allowed. Can only do 1 to 2. Max is 2 units, team. Can't do 3 and 4, even though FHA allows it. When you get into that realm, got to come with all your own money or a different form of down payment assistance. This particular one does not allow it. And the Brazilian rainforest doesn't have 1 bull python. Africa has a ton, though. All right, but you still have more than the Brazilian rainforest, Joseph. Joseph loves bull pythons, team. If you're ever looking for the best snake breeder, Joseph Salomon, along with a great mortgage guy. Okay. Mortgage insurance premium per FHA guidelines, which is 0.55 is the loan amount. Loan to value, like we said, 90% to 96.5% of the purchase price. Again, for a nice round number, if you're buying a $100,000 house, the most you could put down, even if you have $50,000 to put down, the most you could put down to apply for down payment assistance is 10%. Okay. Repayables allowed for the 3.5 and the 5. Forgivable allowed for 3.5 only. Okay. Minimum FICO actually is 620, team. Okay. Minimum, we allow concurrent home ownership, meaning you can own more than one home. We allow non-occupying co-borrowers. So let's say mom and dad are going to co-sign for you pretty much, or an aunt and uncle, or boyfriend, girlfriend, whatever the case may be. Can happen. They do not have to be a first-time home buyer, which is good. All right. Our program does not have income limits. We do not require any borrower investment. We provide 3.5 or 5% down payment assistance. DTI per AUS with 600. And again, team, 620 credit score. What that means, as long as the Fannie Mae, it's called desktop underwriter, approves your debt to income ratios, we're okay with it. I've seen some 55 back end ratios come through. Okay. Here are some frequently asked questions. What if my borrower doesn't make any housing payments? Well, the landlord can fill out a verification or rent form. Is manual underwriting accepted? Yes. What type of first mortgage does the borrower need? Needs to be a 30-year FHA fixed. Do you have to be a first-time home buyer? No. Will you accept a 2-unit property? Yes. Again, that is the max. Does the borrower have to prove they need the DPA? Nope. Are there MCC tax credits allowed as an income credit? Yes. Are gift funds considered for reserves? No, meaning if you need reserves. So that goes back to the manual underwrite team. That means it didn't pass that desktop underwriter, which I like to explain is a pass-fail system. You need to show reserves 2 to 3 months of the mortgage payment, depending on what you're going for. So if your mortgage payment is $2,000 and we need to show 2,000 2 months reserves, I need to show after you put your closing costs, because you are getting down payment assistance. After you pay your closing costs, you have 2 months of that mortgage payment in the bank to do what's called a manual underwrite. Okay. Do you require home buyer education? No, as long as we have a 640 and above. Okay. There's my mug, guys. I'll lean it on the screen for a few minutes. What's the income needed for forgiving down payment assistance? There's not a certain amount. There are no income limitations. It's based, the income needed for forgivable is not based on your income. It's based on 36 payments being made concurrently on the first mortgage. So again, if you go a year, 12 months with on-time payments towards your 36, you're a third of the way there. Let's see you mess up payment 13. That clock starts all over. You then have to make 36 payments again. It doesn't matter when. Okay. And again, the max that's amortized over 10 years, the most you can make it is 10 years. So that loan. So when you make your 36 on-time payments, it doesn't matter when in that 30 years, then that loan is forgiven. You just need to make 36 on-time payments. Okay. Well, team, again, with that being said, like I said, be about 20 minutes or 20 minutes on the button. It's a very, 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 very simple product. Okay. It's all basically still FHA guidelines. The difference is really, are you taking a 3.5% or a 5%? Then we add, it still follows a lot of FHA guidelines. Pretty much if FHA is okay with it, the people giving us the down payment assistance is okay with it. So again, team, for those you don't know, this is my QR code. You click it, you get all of my information on there. Okay. You'll get all of my contact information. I always post this the next day on YouTube. I send out an email as well, giving you guys the link. If there's no more questions, I will bid everybody adieu. Thank you for attending. Like I said, you could rewatch. I know I go fast. You could watch it, pause it, take notes on YouTube. If you want to slide down a little bit late, you could do that as well. But I thank you all. I'll see you all next Monday. If you have anything you guys want to learn, shoot me an email, a text, or whatever the case may be, and I will go over it, and I'll do a segment based on that. But with that being said, guys, like I said, everybody enjoy the rest of their evening. I'll speak to you all soon. See you Monday. And again, hit me up with any scenarios you may have. Everybody have an excellent night.